US indices continue to look soft on Monday. The NASDAQ 100 has started to fall again in the early hours of Monday, dropping to the lows of the candlestick from last week. With that being said, if we do continue to break down from here, we could drop all the way back down to the 17,000 level. Quite frankly, this is a market that continues to look as if it is just going to be a fade the rally type of situation. There's just no real reason for the NASDAQ to climb right now, although it is probably worth noting that we are seeing volume pick up a bit in this area, and that, of course, does at least mark the beginning of trying to find its floor. But we have a lot of external noise right now in the realm of tariff wars and trade agreements and negotiations, as well as a slowing overall global environment, generally speaking, to keep this market somewhat suppressed. The Dow Jones 30 has gapped to the downside to kick off the week, and now it looks like it's basically ready to just fall out of the sky. The 37,000 level underneath is a massive support level, and we may end up retesting that area before it is all said and done. At this point, it just looks like anytime the market rallies, there will be sellers willing to meet it and start shorting again. The 40,100 level is an area that's been important previously, but we broke above there and just couldn't hang on to it. The S&P 500 also looks as if it is ready to continue going lower, as it will almost certainly go, looking to reach the 5,000 level. The 5,000 level, of course, is an area where a lot of people will be paying close attention to, as it is a large, round, psychologically significant figure, and of course will attract a lot of headlines. Underneath there, we have the 4,800 level, which has offered support during the previous meltdown. At this point, it looks like any time that the S&P 500 rallies, you need to look for signs of exhaustion to start selling again. If you enjoyed the video, give me a thumbs up and subscribe to the channel for more analysis.